name is Kathleen Lobito, Marketing Coordinator with AAFMAA, which stands for the American Armed Forces Mutual Aid Association. We're excited today to have you join us for this AAFMAA Mortgage Services, AMS for short, webinar about refinancing. Today we have military mortgage advisor Damon Madlock. Damon has been working within the mortgage industry for over 15 years now and has been with AMS for about a year. He currently works out of our Morrisville, North Carolina office. Today, Damon is going to go over refinancing your mortgage and what some of the benefits or reasons might be for doing so. And before we begin, feel free to type any questions you might have in the comment chat box on your screen, and we'll be sure to answer those. So without further ado, Damon, I'm handing it over to you.
Thank you, Kathleen. I appreciate the introduction, and thank you for letting everyone know a little bit about AAFMAA Mortgage Services. AAFMAA was started in 1879. It was actually at the Battle of Little Bighorn, and it was actually from the fallen soldiers that day. There were some soldiers that were, that survived that battle, and they actually passed their hats around to help the veterans, spouses, and the children that day to make sure that, they were taken care of. And since then, we have been doing that. We have been taking care of veterans in the best way possible that we can, making sure that they, are taken care of with life insurance, wealth management, and also mortgage services. And we continue that mission today to help veterans in every way possible. We're a nonprofit, and, all of our effort goes to helping you as a veteran. This is just a little picture of me, just to let you see me. This is my phone number, my contact information. Any questions you have at all, you can call me, you can email me, text me, whatever is the best method for you to actually contact me. And there's our website. If you want to check out a little bit more about AAFMAA Mortgage, there's some good insight on that website to find out more about us. Today's agenda, we're going to be looking at refinancing because that's, of course, with historically low rates, that's what, most people are looking at right now. It's, by the way, it's also a great time to buy as well. But what is a refinance? Reasons to refinance, refinancing options. We'll talk a little bit about home equity. What are some of the pros and cons of refinancing? And then, of course, any questions that may arise. So what is a refinance? Well, of course, a refinance is when you currently, have a mortgage. You may have a higher rate, or you may have a lot of equity built up in your home. And what you're doing is you're getting out a new mortgage to replace that mortgage. And you're going to, have new loan terms, a new rate, and possibly a new lender. There are many ways to do this. You may be looking at a cash out refinance because you want more, some equity to be used to, do other things that you have for goals, or you may actually just be looking to lower your rate or your term. So there are many different things that you could be looking at when you're refinancing. 6 of the most common ways to, that people do to refinance. A lot of times they're looking for a lower interest rate. Of course, today with historically low interest rates, it's, really in most people's best interest to do so. Of course, even, when we are looking at lower interest rates, we will, I would take a look at that with you to make sure that, the money you're saving actually does pay off over the, the rest of the term of your loan to make sure that that's the best possible solution for you. Another reason why people do refinance, sometimes they are trying to build more home equity. Of course, with a lower interest rate, you're able to put more money towards principal, which helps you increase that equity you have in your home. Another reason why some people decide to refinance is to switch the mortgage type. Years ago, there was a lot of popularity with ARMs, which are adjustable rate mortgages. They sounded really great, but then what people realized is if there's any rise in rates, you're going to see, your payment actually increase. And that honestly is not really the best interest of, of most borrowers. Some do it if they're in short-term housing, of course, or they know they'll just be there for a short time. But generally, that's usually not the best idea. Some people were talked into interest-only loans, or just not really the right fit for them for their current mortgage. So that is a reason to refinance. Sometimes we can get you in something that's going to give you either more cash flow or just a better situation for you. We talked a little bit about, cash out refinances. A lot of times people will do those for home improvements. It's going to be, a lot of those home improvements can be very costly. And if you've built up some equity, it's a great way to have a low interest rate to be able to do that and finance it over a little bit of time. Another thing that a lot of people don't think about, but if you were in a conventional loan, you may have what's called mortgage insurance, which means that you were at over a 80% loan to value on your property, and you had to pay an extra fee each month, and this was mortgage insurance. Once you go below a 80% loan to value, you can remove that mortgage insurance. So that's a great opportunity if you see your home price either rise in value, or you see, just from payments, you go below that 80% loan to value. It's a good time to talk to a mortgage advisor to, see about your other options, because that will save you, hundreds of dollars a month a lot of times. Another reason to refinance, sometimes it's life events. We all know with this year, certainly the economy was shaken up. There is some instability sometimes, in the economy, as there always is. And, it could be from, you're not sure about your job. Hey, let me make sure I have more cash flow. Or sometimes even, in things that we don't like to think about, but, if there's a divorce, sometimes that's your only really option, is to refinance that home. So that's something that we can talk about as well. There are options there. And it's also, sometimes, you have, your kids are about to go to college. Maybe you were saving up, but you didn't quite save up, enough, but you really want to help them out. If you didn't put to the 529 at low interest rates where they are today, refinancing your home with a cash out option may be that opportunity to give them a great, jump start into their future. And you can do that at a low interest rate. I know a lot of college loans today are variable, which, years ago they were not, but since they are today, this is a good way to know exactly what you'll be paying for that event. So this is, because a lot of homes have risen, considerably in value. A lot of you have a lot more equity. And there are, a lot of events like we just mentioned that, could cause you to want to possibly do a cash out refinance. So, as we mentioned, a cash out refinance replaces your existing mortgage with a new home loan. It's something that, you have to carefully weigh out. And, when you speak to me or another military mortgage advisor, I do want you to, look at the options and make sure that it is the right thing to do at the time. We would definitely go through a lot of different scenarios to make sure that it's in your best interest. The ways that you may look at, doing a cash out refinance, you may spend it on home improvements, debt consolidation. Say you just bought a pool a few years ago, or you had a car with a high interest rate. You may say, well, interest rates are so low for my VA loan, or even if you're going conventional, that, you're going to actually save much more over time. Interest rates on credit cards and, for, things like a pool or a car loan can sometimes be 8, 10, 12% or more. So, if you're at between 2.25% and 3%, on your mortgage, then you're going to be saving a considerable amount of money. And, also we can always talk about any other financial needs that you have that you want to use this cash out for, and we can weigh those options. So is a cash out refinance a good option? Well, as we discussed, this is definitely, something that we need to talk about ahead of time. Make sure that, first off, you have enough equity in your home. If you're just on the fence about it, before we even speak, you can check out, Redfin or Zillow or Trulia. Kind of get an idea of, how much you think your house may be worth. If you do an average of the three, then you'll definitely be in the ballpark of it, or use the lowest of the three. The other thing too is to, if you're paying PMI, that's definitely a discussion that we should have. If we're on that border of, uh, we need an appraisal and it's right on the border of 80% LTV for a conventional loan, then, or 90% on a VA loan, then we actually need to, discuss whether or not, using that equity is going to be worth it or not. Because we definitely don't want to put you into mortgage insurance unless it's absolutely necessary. The one thing that we'll have to do is calculate your loan to value and see how much cash you really can get out. So to do that, if you're looking to calculate your LTV, an example here is that you owe 200,000 on your home, but your home is worth approximately 300,000. You're wanting to pay off $15,000 in debt. So for that, what we would do is we take the 200,000, plus the 15,000, which would make you, now have a $215,000 loan. And with how much it's worth, we're saying it's worth 300,000 today. So you'd be at roughly a 72% loan to value. And we put a note in here just to let you know, as we discussed that, you want to stay below 80% LTV for a cash out refinance. And for a VA cash out loan, you have to be within 90% LTV. You cannot go higher than 90 for a VA loan. And that's, one thing that we will always consider, and we will go over those numbers together. So what are some of the pros of a cash out refinance? Well, one of the pros is, possibly lower interest rate. In today's environment, you're definitely, most likely going to be in the lower interest rate. The other part of that, of course, is, if you're consolidating debt, as we have here in debt consolidation, you're probably going to be making that other interest rate, that 10, 12, 18%, whatever that debt may be at, and you're putting it into your mortgage, you're going to end up having, combined a much lower interest rate and be able to save a lot of money over time. The other thing that, this will do for you if you're consolidating some of those credit cards and so forth, this will raise your credit score. You're going to get those ratios on those credit cards at a much better place, and you'll over time be able to see your credit go up, considerably if you can lower those debts. Anytime that you refinance, of course, the more that you are refinancing, depending on, where your deductions are, that interest from the mortgage can be deducted. Of course, we always tell you, consult a tax consultant to make sure that, that is going to help you out or not, based on your current situation. Now, the cons of a cash out refinance, of course, you're taking on more debt. So make sure that if you're using it for anything, that it's something that is going to benefit you. That's why I say whenever you're taking out any cash, let's talk about it first and make sure that it is in your best interest. I've had some people tell me they're only taking out a little bit, but then if we look at, other fees, because of that, they're actually better off not taking the cash out at the time. So it's something that we always should discuss ahead of time. We mentioned here foreclosure risk. Now that's, of course, something that can happen with any loan. If you lose a job, you do anything, make the wrong decisions, of course, there's always that possibility of foreclosure risk, and you're taking on more debt. So that's why we just mention it here that, to make sure that it's something that we've thought out and that we're, doing to benefit you. Of course, you're having new terms now. You did owe a little less. Now you're going to probably take a little bit longer to possibly, pay back that loan. So those are the things that we'll have to discuss. Of course, with any loan that you do get for refinance, you're going to have closing costs. And anytime that we look at that, we're going to look at how many years that's going to take to pay back, and things like how long you're going to be there. Private mortgage insurance, of course, that's one thing that we always have to keep an eye on, make sure that if that appraisal doesn't come in to where we want it to, then at that point, say it's above 80% on a conventional loan, then we'll definitely rethink that cash out option and may just have you do a rate term if that's in your best interest. So some things that I like to have people keep in mind. This is a society where a lot of people are fixated on payment. So I do put that option out there. Is payment really what you're focused on right now? Is that more important to you, or is the term of the loan more important to you? Do you have this goal of paying it off in a certain amount of years? Well, if you do, we can sit down and make sure that we find the best option to do that. Of course, this is the other one, that goes hand in hand with that. How long do you plan on staying in your current home? If you're only going to be there for a few more years, 2 or 3 more years, then we would have to weigh out, are we better off just, possibly not even refinancing? I mean, it really just depends on your situation. If you're saving money still, then of course, we can take a look at it, improve your cash flow. If you are only going to be there 2 or 3 years, then we're going to have to see if, within that time that, the closing costs will be offset with the money that you're saving. And then, of course, I always like to go over what are the short-term and long-term goals that you have, and how are, us reducing your rate or receiving cash out going to affect those goals. If you always had that, trip in mind to Europe or out west or wherever it may be, I want to make sure that we keep that in mind. How are we going to help you be able to do that? Is saving this money going to help you do that? Or, honestly, if you're taking cash out, is this going to affect it in that way? So we always want to go over all those goals, making sure that you are taken care of in the best possible way. So a little market update for January of 2021. I'm glad we're leaving 2020 behind us. It looks like things are improving. They are bringing out, of course, the vaccines, and that is the good news. Economy is improving. However, along with the economy improving, that does sometimes give us some inflationary risk. So we do have to, realize that as the economy improves, rates can creep up. So if you haven't really been thinking about refinancing, this is probably a good opportunity to do so. They do forecast that rates may go up about, 3/8 to possibly 0.5% this year. Of course, that's only a forecast. Anything can change. The Fed has also committed to keeping rates low until at least 2023. So we're still going to be in those historically low rates. But, honestly, this is probably one of the best opportunities you're going to have the lowest rate possible. And this, of course, is my information again. Any questions? And it looks like we had a few questions here. Do you foresee rates staying consistent over the next few weeks? Well, I would say, yes, over the next few weeks, we're probably going to see rates be fairly stable. We may see some, small spikes, in rates. We did see them last week. And those can fluctuate, 0.25% in rate sometimes. So whenever you see a rate that is going to help you out, when you talk to a military mortgage advisor, I would say, start the process sooner rather than later, because, rates can change at any time. They are stable right now, but, of course, that can always change. Another one that, a lot of times I'll get this question, and this is a good one. How long does it take to repair credit? I'd like to refinance, but, my credit score is low right now. Well, that's, it's really in the eye of the beholder. We have to actually, to really know where your credit is, you can get a free credit score each year. You can go to Credit Karma is one that I've heard a lot of people use. It's not always accurate, so it's best to actually speak to a military mortgage advisor first and really see where your credit is. You'd be surprised, actually, especially if we're doing a VA loan. Honestly, we can go to 620 in credit, and the rate is much better than what you'd assume it would be, especially in today's environment. So let's always speak first before, worrying about where we're at. And if you're not where you need to be, the way that I always consult any of my clients, we take a look at where you're at, where rates are that day based on where you're at, and where we can get in the future. With credit, that's one thing that will improve over time as long as you're making your payments, you're paying down your debts, and making, just good decisions, really. But that's, one thing that I will always do. I'll go over some different scenarios of where you can be at different, credit score bumps so that we can make sure that, you get the best rate possible. And sometimes it's worth waiting a month or two. It's really where we want to get you into the best place that you can be. How can I improve my DTI? Well, DTI, of course, is your debt to income ratio, and that is, how much debt you have, which is, what your payments are per month, basically, for all the different, credit cards, car payments, anything that you have, and mortgage payments, and how much income you have. Income is something that, of course, that, if you get a better job, that can help you in that way, but that's not usually or always the option. But what you can do is, try to pay down those credit cards that have maybe lower balances on them. So once you start knocking those off, you knock off those minimum payments, which can, of course, make your debt to income ratio better. And so, a lot of the other question too is how long is the approval process for refinance, and how long is the application process? Let's start the application process first. The application process is really, you can really get it done in about a half hour. What I always tell people to do is start the application online, and then as soon as you're finished with your part, let's go ahead and talk, and I can help you through any other part of the application that we had any issues with, just to make sure all of your information is filled out correctly and everything that you put on there is accurate for you. Then we can go over your credit and everything else, and then, like I said, it's a pretty quick process. As far as the approval process goes, that is largely determined on how much documentation you bring up front. We will ask for a certain levels of documentation for both, refinances or cash out refinances. If you're doing a VA interest rate reduction refinance loan, that's the one with one of the least documentation that you need. But really, a lot of that depends on how much you have that up front. ERLs are generally about 45 days, and other refinances are approximately 60 days. If you're doing a purchase, of course, we will cater that to when your closing date is. Those do take priority. How quickly can you lock in my rate? Well, sometimes it does depend on, market volatility that day. As soon as what we'll do is I will give you a call, let you know where rates are at, and, then I will lock it in on my side to send over to our lock desk. They'll lock in the loan. It can take, your confirmation is usually about a half hour, just to confirm that you did receive that rate. And does the bank or mortgage company keep track of how I use my cash from a refinance cash out? We don't necessarily keep track of it. I do hope that you whatever we spoke about, that you do what you said you were going to do with it. What you will need up front when you do a cash out refi is you will have to have a letter of intent of how you're going to use that cash. And that's really more of the process. It's the intent that you have of what you're going to do with it up front. We're not really going to follow up on it afterwards, but I do hope that after we've talked that you follow through with exactly the best method for that cash out. So that's all I have today. If there are any other questions, please reach out to me, phone call, text, email. I'm available, pretty much any day of the week, anytime. So with that, I hope you have a great rest of your day and a great year.